Um, there's a lot of interest in commodities, and it's good that I work for a commodity company. So I'm going to start by looking at the increase in interest in commodities and rise of commodities as asset classes. I'll try and focus a little bit on Latin America, but I'm always conscious that if the seminar is focused on one region, we end up copying each other quite a lot. So I will introduce the world and the macro environment that's generated this energy and support for commodities, and then bring it down specifically to Latin America, and then hopefully have some words of conclusion that are worth investigating and maybe debating. Okay, but first a little commercial break. We're a commodity trading company, and so we have quite a wide network of offices, but our focus is on sugar, coffee, and biofuels, and I think some of the areas that I've been touched on in terms of Brazil and the ethanol sector is very much our kind of bread and butter and our constant source of debate. But we also have quite a spread of operation, and trading commodities is actually not, it's quite involved. And it requires not only knowledge of knowing what's going on with the individual commodities, but more and more we're turning everybody to a junior economist. Because nowadays, when we don't understand what's going on in the market, we say it's the macros, stupid, and it's always the macros, because we have brought into our commodity world a much wider sphere. And I will touch on some of these things before, but certainly the debate with the development in Asia, particularly China, India. You know, I've been in this commodity world for more than 20 years, and if I was paid a penny for every time I said if only every single Chinese had one single teaspoonful of sugar or coffee or ethanol or used up, you know, I'd be a millionaire by now. But they never obliged really with that teaspoonful, except now. In the last 8 to 10 years they have. But that's enough of that kind of a preamble. Part of the reason and the energy in supporting the rise in commodities has been the appreciation of many of those currencies against the dollar. So the purchasing power of a lot of these countries has appreciated. At the same time, the value of those commodities has gone up. So as you can see in the graph here, we've had the value of our commodities increase considerably. Just in the last 4 years, we're now in an arena that, quite honestly, we wouldn't have imagined. We considered commodities mostly as low-value products, subject to inordinate periods of down cycles, basic commodities. And as economists, we talked about mission goods, and therefore there was a saturation level, and the growth in demand was not generated. But as you can see, we've had quite a significant uplift on values, and this increase in values, because of the increase in demand and also some of the supply constraints, has attracted a whole new audience to this commodity arena, and we believe this is here to stay. So we're in sugar, for instance, trading at levels that are 2-3 times their historic averages prior to 2000. The same for coffee and corn and soya. We've also seen very encouraging price increases. So this increase in price has also been supported, as I said earlier, by the appreciation of these countries' currencies against the dollar. And so we've had more effective purchasing power from developing countries supporting this newfound energy in uplifting the commodity prices. And you can see here pretty much Real, Rupee, Ruble, Yen, they've all been appreciating against the dollar over a longer period. Backing that demand generation from this new constituency called the emerging markets is also being supported by the growth in these emerging markets. And I think some of the previous speakers have already touched on that. That during a period where the advanced economies have had pretty hard time with their economic growth, the emerging markets have been, by and large, immune to it, with the exception of the 2008 era where everybody suffered. The longer-term outlook for emerging market growth is very positive. And although we expect that growth rate to slow down, it's still at effective rates of growth, and that's encouraging and supportive of this rise in commodities. The shift in economic centers of gravity eastwards is a fascinating development. And there's been many studies in support of this, including this City Investment research paper, which identifies that in the last 3 or 4 decades, the center of economic gravity has shifted from somewhere between mid-Atlantic and West Europe, migrating eastwards, and by 2050, it will settle somewhere between China and India. And that's really important, but that's actually very much evident in the commodity sphere, in that these countries are generating a lot of demand, and that's a long-term source of sustainable higher prices, and therefore in support of this newfound status for commodity as asset classes. And so that, I think, is also a very notable development for our commodities. What's also interesting, and what I was saying at the beginning in terms of that teaspoonful of sugar, well, it didn't happen across the whole country, but actually it is happening within segments of countries. And I think this phenomenon, the rise of middle classes, is particularly important. I think why commodities have become on the rise and there is this support for them has a lot to do with this emergence of middle classes, where eating habits that previously were mitigating against growth in demand for certain commodities have actually gone out the window, because people with the same per head income levels are consuming the same things. It doesn't matter where they are. Suddenly they've forgotten that they don't like fast food, or they don't like wearing jeans, and that's not part of their tradition. Everybody does that. Growth in soft drinks and eating habits, coffee, in parts of the world where they only drink tea, is actually very important, and that's what's generating this extra support for commodities, and is giving us the encouragement that this is something to stay. It is sustainable. It's not just a cyclical thing that's going to disappear overnight. This whole position, as you can see on this slide, with having as many middle classes in China as in the US, having a quarter of the number of middle classes in Brazil as in the US is amazing. And I think that's actually a very significant development. As far as Latin America is concerned, I think it's encouraging that the position of Latin America has also been sustained, more or less, in this shifting balance. So commodities are on the rise, and the support has come from economic empowerment. We've seen the emerging markets, the growth in demand from emerging markets, and the prospect for continued growth from some of these shifts in rural-urban migration. That's an amazing source of development, not just for commodities, but I think architects the world over are rewriting the plans for cities. Now everybody's going to live in cities in 3 years' time. You have more people living in cities than in the rural areas. That's another major source of sustainable growth for commodities and for development of many emerging markets that have traditionally had strong sources of production in commodities. And as I said also, the fact that the prospects for emerging markets is positive, that's another boost for this growth in commodities. And although we're now seeing some slowdown in some of the economies, I'm actually surprised at the last figures published for Brazil, which are significantly down on a year-on-year basis, but still is a respectable level of growth, and it's supportive of this continued rise in prices and maintaining these higher prices for commodities. So from a macro point of view, we've benefited from a number of shifts, both in terms of the effective purchasing power, in terms of the changes in the structure of economies, and also in terms of the growth prospects of many of the emerging markets. Further enhancing this support for the rise in prices is concentration of production. So in some of our commodities, we've seen quite a significant rise in concentration of production, both for sugar and coffee. A lot of this has to do with Brazil. And a lot of this concentration of production has implications for prices. It also has implications for price volatility and risk management, which again is in keeping with this new status of commodities as asset classes. We've also seen, as I was saying before, growth on the consumption side as well that's been very encouraging. And I mean, some of these charts are ridiculous. If you see the China's growth in coffee, I mean, it's a bit misleading because it comes from a very low base. But I understand that Starbucks and some of the other key multinationals are developing chains in China already. And that is further supportive for this long-term prospects of coffee. And again, for sugar, we've generated a level of consumption that is going to be challenging to maintain in the long run, and therefore, on the whole, supportive for values. Often people also participate in the commodity markets from time to time because commodities are regarded as a hedge against inflation. And there is general agreement amongst economists that it does make sense. I mean, there's a lot of correlations that don't make sense, but the fact that rising commodity prices is linked with inflation, and therefore participating on the markets would give you, in a balanced portfolio, a good hedge against inflationary pressures, has also attracted more people to participate in the commodity markets and reinforce this new status of commodities away from a basic raw material to an asset class. And therefore, we see more participants on the market from the funds and the wider investment community than traditionally, which was purely to hedge the physical assets. So we've got a wider arena. And before people get too excited about speculators ruining the market and adding more volatility, I personally don't buy that criticism. Not because I work for a commodity company, because most of my colleagues do accept that idea, but because you cannot prove it. And in fact, the involvement of speculators has made the markets work more efficiently, but I don't think we'll go there right now. So I tried to build a picture for you of why it is legitimate and justifiable to accept commodities as an asset class. They give you a good return in terms of competing assets, because we've seen this rise in prices over the last few years. And in fact, if you compare some of the commodity prices that I showed you earlier with the returns in other assets like bonds and equities, they stack up very well, certainly in the last 6 years. The uncertainty in the global economy, the shift from financial instruments with no physical attributes has also become a legitimate support for commodities, because you actually eat sugar and drink coffee and use copper and zinc, and that's actually become an attractive attribute. It used to be a hindrance because it's not paper, you can't dispose of it quickly. Now it's a legitimate investment tool, and it's a physical product, so it's positive. The hedge against inflation is also a valuable instrument for financiers and the wider investment community. And the macros are, in general, certainly in terms of the relative growth in the emerging markets compared with the advanced market, is supportive for this commodity sphere. And so all of that, I think, is painting a picture and putting in place an arena for commodities that is long-term positive. And we're seeing improvement in purchasing power and the growth in demand from the emerging markets. So all or some of these factors also apply to the region in hand, in Latin America. We saw a significant appreciation of the currencies, but then the risk aversion of the 2008, the post-Lehman debacle, saw a lot of those currencies depreciate as many of the investors shifted away from risk of countries' currencies and went back into dollar. I really don't understand that we continue to consider the dollar as a safe haven when we're constantly writing that it's the most indebted and it's got everything else, but that's what happens in the general financial community. Since then, in 2009, we've seen a renewed support for many of the the currencies. And although there's been a dip, now we feel that longer term these currencies will appreciate against the dollar and maintain the purchasing power of many of the countries. In terms of growth, all the countries actually are providing for encouraging rates of economic growth. And although it has slowed down, the prognosis is that the rate of growth will definitely exceed that of the Euro area and the US, and that's encouraging for both what we've called here the fast-growing Latin American countries and the more moderate, whichever band you use. You've got respectable rates of growth and encouraging prospects for those economies, and therefore they themselves are supportive for the commodity improvements. I mean, the first speaker was talking about growth being generated from within. Certainly it's supported by the prospects and forecasts for economic growth, and also within the region. And so even countries like Brazil that rely significantly on exports, and they play such a large role on the world market, they are also playing a larger role regionally, and that's a positive development for the region. Growth in income. Most of the countries in the region, in fact, are now projected to show an increase in per head GDP in the next decades than in the previous one, and that that's actually is part of that story of that having an increase in per head income. It's very much supportive for the underlying developments in the in commodities, and so yes, I mean right now we have difficulties in some regions, and there's some prospects of a slowdown because of external pressures. But again, the sum of the Latin American countries is kind of a subset of the wider emerging market growth. But one or two of the countries, for us, Brazil is such a big part of the world commodity. Brazil is 60% of world raw sugar. Brazil is 55% of coffee exports on the world market. And to some extent, as a country, they may have overstretched themselves, because now we're at this confluence of the GDP growth slowing down, inflation picking up. And I don't know if I should admit this, but when I did economics, when I was studying, was in the 80s, and we talked a lot about stagflation. And I think that's a bit of a danger for Brazil, is that. But overall, there's significant support from the prospects for growth in GDP from those countries. In terms of position on the world market, we've picked a handful of commodities, but you can see that Latin America is a significant player in the commodity arena, and how it's grown over the last 2 decades. It's astonishing, as I said before. I mean, a lot is attributed to this phenomenon in Brazil, but the region as a whole is certainly stepping up to the mark. They haven't let go of the history of growing commodities, and I think it would be advantageous for many of the countries in the region, in Central America, focusing more on sugar and coffee around the whole of the region, both in terms of biofuels and also of cereals and again the basic commodities. It's a very satisfactory platform to be on, and I think it's Latin America has got a big place on in terms of commodities, and it is good to try and develop it further because there's demand for it out there. Some of the specific commodities, again, you see how since 1990 the expansion is really encouraging. If you look at the same chart for many other countries, in Europe we've slowed down various policy initiatives. In America, they found it in North America very difficult to expand, and it's a successful profile that needs to be further encouraged. And it is good to also be a significant part of the export market, because it's in terms of generating foreign exchange and income, it's a good economic policy. There's also land, so we've seen an expansion in the usage of arable land, in contrast to some of the other regions. And I've gone on a lot about coffee and sugar because these are the two commodities that are closest to me. But it is astonishing to then see this country assume such a significant role on the global market, and therefore from that position of Brazil in terms of the export market, I think the rest of the Latin American region should try and piggyback on that, and also perhaps form more alliances regionally to become the force on the global economy. So this is coffee and this is sugar, where again we need to have some of the other Central American countries, South American countries expanding, because we need to get away also from this excessive concentration. It makes the markets far too volatile, and there's also a demand for these crops. So I've just picked sugar here, but if you see since 2000, 55% of the growth in total world demand has been satisfied by the growth from Brazilian exports. Going forward, they can't do this. It's because expansion has now moved further away from the ports. It's slightly more costly. There is room for many other countries to come into this arena and expand, and I think many countries in Latin America, it's an open door to expand, and I think it would be, there is a demand for it, and the prices on the world market will also be equally sustained. So I was asked to, I think one of the areas was political stability. Yes, I think by and large it's been there, but it's in some countries it has worked against the instability has worked against the expansion potential. And also, I think some other speakers touched on over-regulation. I think government regulation to limit exports or forced policies in terms of micromanaging certainly the commodity world, it backfires. You cannot manage the control of those exports, I think the markets will work much more efficiently themselves, and the creating a greater interaction within the region and with the world market will be a much more positive source of development. So I'm coming to the end. I think I just wanted to summarize on this slide that there are many opportunities for Latin American region. We're now embarking on an era where many of the commodities are well supported, and some of the key commodities, there is a structural shortfall. So yes, the markets will be cyclical, and maybe we are going to have some downward price adjustments. But you have to remember, downward price adjustments from when? We're now, in many of our commodities, 40% higher levels. And so at these higher levels, they are remunerative to encourage expansion in production. And I think this opens a lot of opportunities for the Latin American region. The increase in GDP and the rise in per head income is as relevant to this region as it has been to the kings of this idea, i.e. India and China. And the prospects for continued growth from GDP and the higher GDP growth versus the advanced economy, again, is a positive attribute, and I think will provide support for investment opportunities. The Brazil thing is just extraordinary. I mean, the Brazilians believe in their own, they believe they're infallible. Maybe they're not infallible, and it's also not so good for many of the commodities to rely so much on a single country. And so we still need to rely on Brazil because it still is the country that has the most land and the most water. Next to Brazil is Ukraine. Well, I would take Brazil any time. You know, they might have the land and water, but they have a lot of other things, and I think that makes the arena for development difficult, and therefore there is a lot more reason for support of, that position of Brazil is going to be maintained, but for various reasons, I think opportunities will come, or are there, for many other countries in a smaller way. And finally, it is important that many Latin American countries have had a history of cultivating commodities. And that always helps. I think when you try and introduce something completely new, alien to the local psyche and knowledge, it makes it that much harder. So in many respects, I think the Latin American region needs to take the experience that they have and really believe that the commodity world does offer remunerative opportunities and expand on it, and do less with the politics and open up the countries to greater investment. Thank you.